Some huge changes are happening right now with our US housing market. So in today's video, I'm going to share the latest trends we're seeing right now regarding home prices, housing inventory, the share of price reductions, and much, much more. This is based on my own analysis of Realtor.com's latest data just announced today, which is November 9th. So with that said, let's begin today's video because I have a lot to share here. Here's their actual report here, just posted on November 9th, which is Thursday. And just like my previous videos, I did not even read it. Instead, go to realtor.com/research/data. I'll leave a link in the video description below here, but just click on this link right here, and it takes you more or less to this information right here. So I haven't made this video in about 3 weeks, so some very big changes happening right now. Let's first talk about asking prices nationwide because that increased by 1% compared to 12 months ago. This is a fairly significant increase compared to just a few weeks ago. So home prices have been relatively flat or up slightly every week ever since late July. We're not seeing a sharp pullback in prices due to two main reasons. Number one, limited inventory of existing houses, historically speaking, down by about 37% compared to the same week of 2018, looking at pre-COVID levels. And number two, because home prices were falling much faster at this time last year compared to this year. That's why asking prices are up by 1% year over year. Let's also talk about active listings, or the total number of houses actually for sale. This is housing inventory, down 0.2% year over year. This marks the 20th consecutive week in which we've had a low level of active listing inventory. In other words, we're not seeing enough new listings hitting the market, which is causing inventory to remain at historically low levels. Also, this is due to the fact that inventory increased much faster last year compared to this year, especially in the spring and early summer months last year. Now, here's the big change though, because the year-over-year decreases have actually been getting more narrow and narrow as the weeks have progressed here. So now we're only down by 0.2%, but just in early September, we were actually down by 5.1%, for example. So the declines are actually getting more narrow. And I would expect we could be into positive territory year over year here very, very soon. I also want to share this with you guys because looking at my own analysis of inventory levels according to altosresearch.com, it's a pretty big change what we're seeing right now compared to what happened last year. So according to them, we're down by 2% year over year for the number of houses for sale. This is existing houses only. When looking at the changes compared to the start this year, there's about 95,000 more homes for sale compared to the first week this year. So inventory levels have increased by about 20% year to date. Compare that to this same time frame last year, we saw a growth of 284,000 more homes for sale compared to the start of last year. That represented a giant increase of 97%. So we're seeing a 20% increase of inventory levels year to date so far this year. Last year this time, we saw a giant increase of 97%. Also, inventory has been increasing very slowly ever since April this year. So supply is still rising due to home buying demand falling. It's entirely abnormal for inventory to still be increasing because inventory levels during this time of year should be decreasing, not rising. Also, as I mentioned, we have about 2% fewer homes for sale right now. When comparing this to pre-pandemic levels, during the same week of 2019, we have around 37% fewer houses for sale. Now, one of the reasons why we have a lack of houses actually for sale is because we're seeing a decrease of new listings. Now, here's the big change though, because over the past 2 weeks, we're actually seeing more new listings compared to last year. So it says here, just as I predicted this, 3 weeks ago? I said that we should be seeing a gain of new listings on a year-over-year basis. So after 68 consecutive weeks of year-over-year decreases, new listings are higher compared to the same week 1 year ago, now for the past 2 weeks. So new listings were falling much faster last year due to the sharp increase in rates we saw last year. However, new listings and inventory levels still remain very, very low. So despite the fact that new listings are up compared to 12 months ago, they are still at historically low levels. Okay, let's change gears slightly here and talk about days in the market, the time frame when a home seller lists their house for sale until they accept an offer from a home buyer. That's days in the market. Again, though, a friendly reminder, this is a lagging indicator of our US housing market because this is based on closed home sales. In any case, last week, it took 2 days faster to sell a house compared to 12 months ago. So houses are selling faster for the past 5 weeks. Before that, they took longer to sell for 58 consecutive weeks. Some big changes happening right now. Now, in regards to the number of price reductions, the number of price reductions is actually down year over year for 23 consecutive weeks. Before that, we had triple-digit gains to start this year. In my opinion, the reason why we're seeing this number here being negative is due to 2 main reasons. Number one, limited amount of houses for sale nationwide. So in other words, there's fewer options of home buyers or fewer options of houses to buy from home buyers, which is leading to fewer price reductions. And number two, price drops surged last year. In contrast, the share of price reductions is relatively flat so far this year. Let me share exactly what I mean by this, because inventory levels right now are at around 567,000. Is still lower than 1 year ago, but about 37% less than 2019's levels, and even lower than 2018. That's inventory levels. But the share of price reductions is still rising, but it's actually still below last year's levels. So the share right now is at 39%. This means more or less that every 10 houses that are listed for sale, 4 of those have had price reductions. So the share right now at 40%. This is below levels in 2022 at 43%, but at 39% right now, much higher compared to 2021, 2020, and actually a little bit higher compared to pre-COVID levels at 36% in 2019 and about 37% in 2018. All right, I know that was a lot to cover in today's video, so here's a summary for you guys. And then I'll provide some predictions and also kind of a summary about what has been happening with our US housing market over the past week or so regarding all these reports that I have been sharing with you guys. So number one, asking prices have been relatively flat or up slightly year over year every week ever since late July. Prices have not been dropping from a year ago due to limited inventory levels and because prices were falling at a much faster pace compared to last year. Now, I want to clarify though, I just kind of thought about this. Home prices have been decreasing ever since late summer, which is seasonal. But when looking at prices compared to 1 year ago, they actually have been up for quite some time. To be exact, asking prices have been up compared to the previous year ever since late July. Number two, housing inventory decreased by 0.2% year over year last week, and that marked the 20th consecutive week of decreases. Inventory has been slowly increasing this year though. We're up by about 95,000 more homes for sale compared to the start this year. That's a 20% year-to-date increase. Compare that to the surge we saw last year. We saw a giant increase of 284,000 more houses for sale during the same time frame last year compared to the start of last year. And that was a giant increase of 97%. That was one of the main reasons why prices fell so much last year and why home prices are not decreasing as much as last year. Also, the number of new listings remain at very low levels, even though they are up slightly compared to 12 months ago. The low amount of new listings is causing inventory to remain at historically low levels, again, down by about 37%. Number 3, the average 30-year fixed mortgage rate has been hovering around 6.8 to about 8% ever since late May this year. 1 year ago, it was at 7.20%. Number 4, the share of price reductions is slightly higher versus the same week of 2018 and 2019, but lower than 12 months ago. So again, as I shared, 12 months ago, we're at 43%. Now it's at 39%. Number 5, houses are selling faster during the past 5 weeks. For comparison, they took longer to sell for 58 consecutive weeks. That was from August last year through August this year. Again, this is a lagging indication of a US housing market. So what are some potential huge changes ahead, given the fact that rates have been at or above 7% for quite some time? And again, a friendly reminder, I am not a real estate market fortune teller. Number 1, average 30-year fixed mortgage rates are about only 0.3 percentage points higher today compared to 12 months ago. That causes only a 3% decrease in buyers' purchasing power. Also, there's a lot of challenges that our housing market and home buyers are facing right now. We have record low housing affordability, low inventory levels of existing houses, sky high rates with elevated prices. And of course, a lot of uncertainty regarding our US housing market and of course, our economy as well. Number 2, housing affordability is a huge hurdle for home buyers, especially compared to the past several years. So rates more than doubled and prices increased by about 27% ever since September of 2020. That's based on my own analysis of the National Association of Realtors. Also, rates still remain very much elevated, and on a national level, home sold prices are up by about 6% year to date. That's based on my own analysis of Redfin's data. So again, housing affordability is actually getting even worse. In my opinion, this is not sustainable. We should be seeing seasonality and all these affordability constraints, which should put downward pressure on prices into the winter months here. Number 3, early signs of home buying demand have been absolutely all over the place this year due to the volatility in rates. The most recent stats we have from the MBA reported on Wednesday showed that the amount of people submitting loan applications to buy houses fell 20% year over year. Also, the MBA's purchase index is roughly on par with the lowest levels in the last 28 years, going back to the year of 1995, despite a small increase week to week that was reported this week. Also, NAR, or the National Association of Realtors, reported pending home sales in September fell 11% compared to September of 2022. That marked the third lowest reading on record based on my own analysis of their data here. In stark contrast, new home construction sales, as defined by a home builder accepting an offer from a home buyer, so this is really acting more like a pending home sale, that actually increased a whopping 34% during that same time frame, September last year through September this year, increasing by 34% compared to the resale market of existing houses, decreasing by 11%. It appears our housing market is highly rate dependent. So of course, the data coming in is ever changing. And of course, real estate is local. So the trends I'm sharing in today's video have to do with national trends, which may differ compared to your house, your street, your neighborhood, or even your state. Number 4, home sellers and buyers have exited the market, leading to a dip of new listings and also contracts being signed as well, especially compared to the past several years. The lack of new supply of existing houses since last summer has led to inventory remaining at historically low levels. If homeowners continue to decide that now is not a good time to sell their house, of course, that will limit housing inventory. In my opinion, the direction of our US housing market will likely depend on unemployment rates, mortgage rates, inventory levels, and of course, the balance between supply and demand. Number 5, the most important one, I appreciate you guys for watching today's video. Of course, for supporting my YouTube channel. I appreciate you guys very much. And of course, if you guys are still watching today's video, I appreciate you even more. Please hit the like button. I really appreciate that, of course, as well. Have an awesome day. Like and subscribe, and I'll see you in the next video.